Good evening, one and all, and welcome to the Traders Corner daily market update for the 9th of December 2010. We had quite a bit of data come out from the markets today. First of all, we can talk about the fact that Ireland had their credit rating downgraded from an A plus to a triple B plus, which obviously doesn't bode well for Ireland or the Eurozone for that fact. This kind of data really does add to the fears that the markets already have about the Eurozone and the sovereign debt crisis, and this just really makes things a whole lot worse. After that, we can talk about the fact that the US unemployment claims dropped to 421k from the previous week of 438k. So even though it's still not great news, it does show signs of improvement, which is a good thing for the US economy. Bouncing back again to Europe, we had France following Germany with their refusal to add to the rescue fund that the European Union have put together for the distressed countries like Ireland, Spain, etc., which again is a very bad thing for the Eurozone. All of these things adding up doesn't give investors confidence when it comes to the Eurozone as a whole, which is going to drive capital away from Europe and into other markets, which for the euro that's going to be a bad thing, obviously, because people are going to be selling euros to buy other currencies, which will push the euro further down. Finally, the other bit of data that came out of the US is the fact that PIMCO, one of the largest bond companies in the world, raised their US growth forecast from I forget the figures, but basically they revised it upwards, which is a very good thing again for the US economy. So what we're looking at here with these four pieces of data that we have on the screen is basically euro dollar. We need to be shorting. Not in the short to medium term. Obviously, we don't know what's going to happen next month. We don't know what's going to happen the month after that. But the data that's coming out at the moment really shows us that the euro dollar should be going down. However, having said that, when we go to the charts at the moment, you're going to see that even though we got the volatility, the market has retraced a lot of the moves. So we've got to wait for the right levels to be getting into our trades if you're not already in, and just monitoring this closely, because even though the news is telling us one thing, the charts are telling us something else. So let's jump onto the charts again as always and take a look at what we have presented to us. Okay, so let's start off with the euro dollar. Now, this is a daily chart, and we showed you this yesterday actually, we showed you a trade that we got into based off of a 4-hour chart. So if I just jump onto the 4-hour chart for a second, we took a break of this particular level here off of the retracement up to the 61.8 fib retracement level on a previous level of support, which had become resistance. Now, unfortunately, even though we got the move down, as we said, which is off the back of some of the negative data, we got to move all the way down to 3158. Since then, we have retraced the move back up to pretty much our entry level, or just above our entry level, indicating that even though the data is pointing to further weakness, at the moment the charts aren't really agreeing. So this is something that we're going to have to monitor at the moment, because if it carries on moving down, it looks like it should technically, then that's great, we're going to be in the money. However, if it fails to carry on downwards and it actually breaks back above, what we have here is a technical reversal of the trend. So we're failing to make a lower low, we're breaching a previous high. So what we'd be looking to do is close out our position somewhere around here and getting in long, looking for a sustained move to the upside. Obviously, I mean, the markets at the moment, after a pretty significant move, have retraced, but that's normal. That's what happens within the currency markets, or within any financial market for that fact. Nothing ever goes in a straight line. It always, we have these waves where price comes down, retraces back up, comes down, retraces back up, and hopefully for our positioning we'll get another move down to here, and if it breaks this level, somewhere around here. But at the moment we seem to be finding a little bit of resistance, which if I zoom out a second, you'll see in the past, look at where price is, literally. In the past, this was an area of support, going back to April of this year. This was acting as a layer of support, and this is exactly where we've got our doji type candles over here. So, you know, it's obviously the markets remember this previous level, and the bulls are seeing this as a level that they can get in and buy at. But if the bears manage to take hold of the situation and win it, then obviously we'll be seeing a move down here, which is what we would like considering our position at the moment. Going into the other charts that we showed you over the past few days, we got the pound yen, which, you know, again, we do like this level. However, the market's fallen away a little bit at the moment. We've got all of these issues in Europe is obviously having its effect on the pound as well. You know, the euro dollar and the pound dollar aren't as closely correlated as they once were, but they still, you know, are a little bit correlated. So anything that's affecting the euro at the moment is also having a slight effect on the pound. Looking at the euro CAD, we're still looking to short this if we get below this level here. Again, it's just playing around a little bit. It's range bound, so, you know, enough said there. We'll wait and see what happens when price gets down to this level. New Zealand dollar, the one that we missed, is retracing a little bit now, but we anticipate that this is probably going to carry on further down for, you know, for the next few weeks or few months, but, you know, we'll see how that goes. The dollar franc, still waiting for this to break up above this level. We still like this trade fundamentally and technically, but it's just a case of having patience and waiting for the right price action to enter in on. And there was one more that I wanted to show you guys, which I was looking at earlier and am considering shorting, and that's the euro franc here. We started a downtrend with the fact that we've got a lower high and lower low. The market's consolidated a little bit here. If we go into the 4-hour chart, you can see that we've got a triangle pattern. We've got the consolidation, we've got the breakout of the triangle. If we go into the 1-hour chart, what we're waiting for is we're waiting for this level to be broken to give us an indication that actually this breakout is a real breakout, not a fake breakout, and we'll be looking to short that and ride that to the downside. So really not too much happening from a technical perspective at the moment. Is sort of wait surrounding seeing, but you know, that's trading. That's what happens when you're trying to follow a trend. You can't just trade here and there willy-nilly, wait, you know, in consolidating markets, because you're going to get thrown about whipsaws and taken out of trades for no reason. So it's just about having the patience, waiting for the right moves, and then profiting from those moves. So we'll update you again tomorrow or Saturday. I mean, tomorrow's Friday, or Saturday morning. Again, we've got quite a bit on tomorrow, so if I don't get around to it, I'll make sure we get a video out over the weekend to update you on what happened tomorrow. But at the moment, it's just a case of wait and see. We've got the setups that we're looking for, and we just need to wait for them to play themselves out. So thanks for listening, and we'll speak to you again tomorrow or over the weekend. Take care.